guys, welcome to this week's AMA, Bomb Money. Today we have a pretty awesome topic actually. So we're going to be talking about the top 10 ways to earn crypto in 2023. And I guess this AMA was inspired by a great blog that Marcus wrote just earlier this week that you can check out at www.bombmoney.com/blog. And yeah, it provides an amazing array of ways that you can get into cryptocurrency and begin earning. So we're kind of going to go through that, break it down, and share just some personal experiences that we have of utilizing these ways. This isn't going to be a shill for Bomb Money. These are just general ways that you can earn money in cryptocurrency. So yeah, I think we're all looking forward to getting into it. So, Aaron, do you want to screen share, and then we can just use the blog as a bit of a reference guide, and as we go, as always, we're happy to take questions. So feel free just to pop those in as we go, and we'll cover them off. Or if it's not questions, if you've got any tips or experiences you want to share, then we'd love to hear those as well.
Yeah, it can be bomb related or anything really. Is Rob quiet for you guys, or is that on my side?
I think it's on your side.
Okay, yeah, you sound fine.
And and the thing is, these tips are, there's so many different ways to earn crypto, and this blog highlights probably the top 10. But what's really useful is that I also put the risk factor, because there's obviously very risky ways to earn crypto, but there's also very ways to earn crypto with absolutely no risk. And then also the degree of difficulty. So we'll talk about that, and you'll see some of our personal experience, and we could talk about some of the, obviously with some of the riskier ones, we'll have stories where we've lost some money doing that. But then, of course, there's been lots of opportunities throughout the years. So, yeah. And I don't think we need to really have the blog up the whole time, but just showing, and again, this is kind of what Bomb Money is going to be teaching now. We're really focused on education and building trust, and this is some of what you can expect from Bomb Money now, really teaching people how to get into crypto and some of the great opportunities therein. And obviously one of the best ones we think is Bomb Money, which we'll get into at one of these steps. But without further ado, let's get going.
Sorry, did you mention that you don't want this blog post to be here, or just to kind of to show what the?
I don't think it's necessary. We'll be chatting about it.
Yeah, we bring it up, bring the topics up. But the first one, trading cryptocurrency. That's a very exciting one.
That's probably the first thing that people think when they think of how do you make money with cryptocurrency. It's probably the first thing that comes to mind.
Yeah, definitely. That's one of my weaker points. So I'll pass on there, because I don't do enough research to trade successfully.
Yeah, I'm really not that great of a technical trader. I have conviction about an asset, and I generally just buy it. So probably Rob's the best one to speak about this one, I would think.
Probably. I'm not gonna step up either. I'm more of a hold it guy.
Well, yeah, I like to trade, but I'm just a perma bull, so that tends to get me in trouble. So 125x long. Let's go.
It'll do you well when the full on bull market's back. That's for sure. But yeah, and full disclosure, I wouldn't say that I'm an amazing trader by any means, but I have a reasonable understanding of technical analysis, and from time to time when I see an appealing trade set up, I'll tend to take it. So yeah, the first thing I probably should say is I think 9 people out of 10, if not more, would probably do just better dollar cost averaging, which is a tactic that we'll talk about, I'm sure, later on. Because the reality is that timing the market is undoubtedly very difficult, and even with technical analysis, it's still very much a probability-based game, right? Based on a whole range of indicators, everything from trend lines, support and resistance lines, through to, indicators like your relative strength index, FVGs, blah, blah, blah. There's a million and one. I won't try and list them all. But, the key thing is just trying to assess the probability of a price moving in one or the other direction, and then, taking a position that reflects that. For me, when I am taking a trade, it tends to be a fairly short term, because I find that if I try to swing trade, hold something over the course of a few days or weeks, then it just doesn't work brilliantly for me from a sort of psychological standpoint. I start to doubt myself. Whereas actually, if it's a sort of quick in, quick out trade, then I begin to be able to manage that side of things much better. And I think, just you've got to sort of put your inherent biases you have to the side, and that can be really difficult, right? I mean, we are all really bullish on crypto long term. So for me, in the early stages of trading, I had to put that to the side and, assess the probability of upside versus downside. And actually, sometimes the right answer is to short the market, either directly or, through buying puts, if you want to get into some more advanced strategies with options trading, etc. So, and I would always just say, especially if you are sort of taking shorter term positions, just be careful with your risk management. You should have a clearly defined risk versus rewards, and therefore your risk should be defined, and you should know where your trade thesis is invalidated. And usually that's around where you would want to have your stop loss, right? And you've got to be somewhat careful with where you put your stop loss, because if it's where there's a whole load of liquidity sitting, then it's probably going to be hunted by market makers, and you're not going to do particularly well. But equally, it's better that you're sort of quickly taking out your stop loss than holding on, hoping things are going to turn around and it destroy your account.
Yeah, that's awesome. Sorry, Aaron, you're muted, but that's awesome insights, Rob. And as you can see, there are so many complex things that Rob was discussing, and that was just scratching the surface. So when it comes to trading and learning technical analysis, there's so many things to learn. And of course, none of them are like scientific indicators. They're not going to 100% predict anything. That's impossible. But what the strategy is for using technical analysis is putting everything together to try and tell a story as to the highest probability of what's going to happen to an asset. So that's an important thing to understand, is that even if you understand every aspect of technical analysis, you can still get things wrong. Even if something's 90% likely to happen, it can still go down. So yeah, as Rob said, always have a robust risk management towards your trading.
Yeah. And quick story. I mean, during the FTX crash, I decided to open up a short on FTT, which is the FTM token, which initially was doing very well. And I was in profit, and I was really tired. I was in bed. I was looking at my position, sort of debating whether to close it. I was like, no, it's fine. I'll move my stop loss, and that way, if it goes against me, I'll close in profit. Somehow, in my tired state, I managed to completely screw up the stop loss, and I woke up to have been liquidated. And thankfully, it wasn't a huge position by any means, but it was enough to be painful and to go.
I did the same thing the other way around. I was setting my stop loss, and I actually accidentally set it like a way I think I actually set it like higher than what the price was or something like that. So it just instantly sold. Then I jumped into a meeting, and the crypto was just pumping like crazy. I was like, oh man, I'm going to be up like 20 grand right now on my futures. Yeah. All of a sudden I look and I have no position. I'm like,
yeah, what? I've done that as well. Yeah. So check and check again before you submit any order. That's for sure.
Yeah. Couple of things I'll add here though. So always be aware of like the human factor, right? Like it's something where when something's moving up, you feel like it's going to keep moving up, and it's, people tend to get greedy and they have a hard time taking profit. Crypto is super volatile. Even in a bull market, it still swings like crazy. It wicks like crazy. So, especially if you're using leverage or futures, it's very easy to get liquidated or get stopped out. So definitely don't be afraid to take a profit. Whether you close half, 3/4, or the whole thing, doesn't really matter what it does next, because it could have easily just, wicked down or wicked up and got you right out of your position at a loss. So, definitely, it's difficult. Greed's gotten the best of me many times, right? But it's definitely a lesson that I'm trying to learn.
So Max saying use 30x leverage when trading. that's quite a risky tip, but people do use leverage, and not everyone's going to understand what leverage is. So Aaron or Rob, you maybe want to explain what leverage trading is and why it can be extremely profitable, but also it's very, very risky.
Yeah, I mean, just in case anyone's familiar with stocks, I guess that's a good place to start. It's very similar to I shouldn't say it's very similar. It's the same principle as like buying stocks on margin, where, I know here in Canada, like a blue chip stock, you would typically only have to put up 33% of the price of the stock, and then you'd borrow the other, the remainder from your brokerage house. And that way you can own 3 times as much stock, but now all of a sudden you only need the stock to go down, 1/3 and you're wiped out, versus, you don't really get wiped out if you own the stock unless it goes to zero, if you don't use margin. Crypto just takes it to a whole nother level though, with some of the stuff you can do. So, the stock example I just gave, I'm not sure if there's ways to, margin further than that. I'm sure like at the institutional level there is, but for retail traders, I don't think you really can go more than like 3-to-1 kind of thing. But crypto, margin trading, 10-to-1 is common. I guess for isolated pairs, I think something probably even 10-to-1 is probably as much as you can go, right? Because I think you have to get into futures to go more than 10-to-1.
Yeah, I was going to say, certainly the platforms I use, you'd have to go futures.
Yeah, I don't think I've ever seen like a straight margin trade that was over 10-to-1. But yeah, so essentially like at 10-to-1, essentially what's happening is, every $1,000 you put up, you can buy $10,000 worth of crypto. So it only has to move down 10% for you to get wiped out. But in reality, you're going to get liquidated when it moves probably closer to like 6 or 7% down, because that liquidation price is way higher than actually when your account would be at zero. And a little trick that I've learned, I'm not sure if this applies to margin. It definitely applies to futures, every platform I've used. But if you get liquidated, I find you get fully wiped. If you set your stop loss like 2 cents above your liquidation price, you'll have like 30 or 40% of what you started with still left in your account. And it's not bulletproof, because I think there's sometimes I have been stopped out where I might not have been liquidated, even if my stop loss was right next to the liquidation price, because I think they don't use the same systems necessarily for that, where, potentially if it just wicked down super quick, that liquidation might not have kicked in, but my stop loss did. So I think I did screw myself once or twice with that strategy, but I also saved myself a lot of money from all those potential liquidations. So if you're doing futures, I definitely recommend setting a stop loss, even if it's just a hair above your liquidation price.
Mm-hmm. Yeah. If any of this sounds daunting to anyone, that's okay.
Don't do it.
Trading, it's not for everyone. And there's a saying in crypto: time in the market is better than timing the market, because timing it can be very difficult. And earlier, Aaron had mentioned DCA. That's dollar cost averaging. That's basically taking an amount.
We're gonna get into that later.
Yeah, we'll get into it later, but basically, just being in the market, have some. If you're bullish, if you believe in a crypto, have some crypto. Just wait it out. We'll go into more detail about that, but basically, if anything we're talking about does sound daunting, that's okay. There's other techniques.
For sure, and for full disclosure, whenever I'm trading, my trading account is less than 5% of my overall capital, right? So the majority of my positions are just buy and hold, and the majority of that is in the bond ecosystem, which is just my preference and aligned to what I'm bullish on. Obviously, I do have some holdings elsewhere as well, but I just want to emphasize that certainly I'm not using my whole net worth, in terms of trading. There are much better traders out there than me who'll obviously use a higher proportion of their capital for that side of things. But you just need to be careful, and as with anything, don't risk more than what you can afford to lose, right?
Yeah, I mean, I would say it's almost gambling, right? Like I mean, I guess if you're just buying on margin, not as much. But if you're going futures, like 25 or 50x plus, it's really just gambling. I mean, obviously you could pick the right points, and it's not 100% gambling, but it's still it's basically luck. You never know when it's going to wick down. Things can wick down, for any reason at any time. There's probably thousands of people that have the power to do that at any time, right? So, let's just do sell 500 Bitcoin. I'm sure there's lots of people that could do that whenever they feel like it. So you can get wiped out just because they say, hey, I'm going to wipe out everybody that's long right now. So that's how easy it is to wipe you out. So I'd say, I would generally stay away from trading, honestly, if you care about your money, unless you want to get really serious about it. There's just probably better strategies. I mean, unless you just want to have some fun.
And there are a lot of places that let you practice trade. So you can have like a fake portfolio and just start getting used to buying and selling crypto and seeing if you'd actually have profited or not. And if you do that and you're successful for 3 or 6 months, then it could be time to actually put some real money in and start trading with real money. But it's always a good idea to practice and start learning and understanding before you really jump in and, lose all your money.
Yeah, totally. And there are a couple of other things that are mentioned in the blog around copy trading. So some firms like Bybit allow that. So basically, you can follow the performance of really good traders, and then essentially allocate capital that is going to replicate the trades that they're performing. I've never actually done that. I don't know if any of you guys have.
Copy trading? No.
Haven't done it, but I've seen people be successful with it, but I've also seen people get destroyed with it, like almost any trading. And that's why there is risk, and you really have to understand who you're copying. You can see the cool thing about copy trading is you can see their entire history. So you could see this person's been like for a year successful, making 5 to 10% a year or whatever they make, and make your decisions on that.
Well, I got a quick story. I was actually like so happy when I first found DeFi, because I just found like, I can, basically stake crypto or stake, a liquidity position, and then I can earn pretty outrageous amounts on it. And I'm like, well, now I don't have to do these risky things where I was typically going to zero. Now I can make good money. And I mean, of course, there's smart contract risk. There's other risks that are involved with some of the other strategies, but not quite the risk of if you get a wick in the wrong direction, you're at zero. So there's definitely great ways to make money that don't involve that level of risk. But again, just like everything, with trading, you can make it as risky or safe as you want, I guess, depending on how you execute it and how you set things up.
Definitely.
Yeah.
All right, so we confused everybody.
Well, I think the reality is with trading, it's not going to be for everyone. But if you can become disciplined and really put effort into learning, then undoubtedly you can become very profitable. I mean, I follow a community called Because Bitcoin, and some of the traders in there are just incredible, and they have a lot of awesome resources, to help people learn technical analysis. So, and we are in no way linked or affiliated with them. They're just a bunch of smart guys that I personally enjoy learning from. So, yeah, feel free to check them out.
Nice tip.
Cool.
Yeah.
Cool. And the other thing, by the way, that we've mentioned in the blog was trading bots, which again I've not played around with at all. But again, what about you guys? Any experience of using those?
Well, I guess there's a couple different types, right? There's like, you can write your own. You could tell ChatGPT to make you one. You can pay someone for a bot. I mean, I see all kinds of AMAs with these bots that people sell. I've heard great things about them sometimes. I've heard horrible things about them more often than not.
Yeah.
It's something that I've never tried because I have no interest in it.
I'd say a big warning for bots is, and a lot of bots, people sell these bots, but they're not actually trading. It's literally just a Ponzi, right? You just buy the bot and then they give you money out.
Well, that's how I look at it.
So there are bots that actually do trading, and those bots should have a transaction history and a trade history and a performance history. If you're about to buy a trading bot and they can't provide that, then there's something fishy with what you're about to buy. So yeah, that's one thing to watch for. And when you're buying trading bots, you should always be able to see its performance. And also, even the ones that do perform well, from my experience, they're just consistently, if they lose a little bit, then they leverage and buy a little bit more and a little bit more. So they do tend to flatline or make profit until you get liquidated, because it just keeps repurchasing. So I've seen bots like that, and those things, they'll last like 3 to 6 months, and that wins every trade because it has to, because it keeps buying. But until it doesn't win its trade, and then it's liquidated everybody. And
it sounds like going to the casino and playing blackjack, and if you lose, double your bet, and if you lose, double your bet, and then you
that's
do
basically
that
what the bot does.
Until your
leverage,
your Lamborghini's on the table, and you lose that, and then you got to go.
Yeah. So that's why I even put in the blog, just a warning: be very careful with trading bots. There are successful bots, but there are ones that are obviously total scams, and then there's ones that are just inevitably, if the market crashes 20% in a day, everything will be liquidated, because it's just going to keep buying up. And yeah, so
the one thing
I would not recommend those.
The one thing I don't get with people selling bots is that if it can make you money, like, there's no need to sell it. It's kind of like if you set up a really good arbitrage bot, which actually we're going to talk about arbitrage a bit later, but a good arbitrage bot that's configured right is literally a money printing machine, right? So it's like, why would you ever give anybody access to that for any amount of money? You don't, right? Like, you don't sell this. It's the same thing with a trading bot, in my opinion, right? I have a money printing machine here that's proven to work. Why am I going to let other people use it or even see it, right? Like, it doesn't make any sense.
Well, people buy books that teach you how to win the lottery, even though the authors never won the lottery. So you can sell anything to anybody.
Yeah, I've seen that. So Max says KuCoin and other platforms have pre-built bots you can use as well. So something I've also stayed away from, because I just don't like bots. But yeah, in that sense, for trading bots. But yeah, KuCoin, I've definitely seen that option there.
Mm-hmm.
They have like a grid bot and some other kind of bots. And I don't even know what that means.
I'd be interested, actually, Max, in knowing your experience on those. Maybe you have to give me a little upskill at some point if you think it's worthwhile.
Mm-hmm.
Cool. Alrighty. Anything else on trading then to throw into the mix before we move on to the next way to make money with crypto?
Anybody in chat have any stories? Any big wins, losses, lessons learned, tips for the others?
I was saying to you guys just while we're waiting that Rollbit, which I think is primarily a kind of online Web3 casino, they do 1,000x leverage. Now that is pure gambling. It's just insane. So yeah, not recommending Rollbit, to be clear. But yeah, I thought that was pretty crazy.
Send me your referral code. I'll check it out.
Coming your way. All right, I don't think we've got anything coming through at the moment. But yeah, guys, as we go, definitely feel free just to drop stories. And even if it's about the topic we were talking about previously, we can come back to it.
Sorry, Starlink booted me there. All right, let's move on to the next one.
Thanks, Elon.
Yeah.
Earning cryptocurrency, completing gigs.
Yeah, this is an interesting one. So a lot of people might be familiar with companies like Fiverr, where you can create a website, you can create any type of content, you can write blogs, you can program, and you get paid money, or like $5, $50, whatever, to finish that gig. Well, they also have those similar things in crypto. One of the most popular ones is called X Hashtag, but I'm not going to endorse them. There's tons of them, but that's just the one that happens to be the most popular. And yeah, if you have any programming knowledge, if you have design, if you have, and you can make music, you can do whatever you want, and you can list your things. Say, for 0.5 ETH, I'll develop a website, and it's just a really great way to earn crypto. You don't have to worry about on-ramping. You just perform all these tasks, and bam, there you go. You get paid out in crypto. So it's obviously it's going to go to an anonymous wallet, but I would highly recommend everybody report all of their taxes, but it does go to an anonymous wallet. So
yeah,
I
was just going to say, oh, sorry, yeah, go for it, Arnold.
No, you go ahead.
Sure, yeah. Well, I was just going to say, having worked in HR related roles, for a number of years, talk of the gig economy, has really come to the forefront over the past few years, and large organizations are recognizing that the gig economy will become more focused, i.e. there will be fewer people that will have standards jobs where they're directly employed by one company. And actually, it will, there will be more gig-based work, i.e. short-term contracts. Perhaps, you'll work for a few companies at the same time. And naturally, there are a whole host of benefits to that. But, coming and working in the Web3 world, it's just fascinating to see how large the gig economy already is. So yeah, I think there's a lot of opportunity in this space. So I'm not familiar with X hashtag, but there are a whole load of Web3 companies that are looking for people with a whole load of different skill sets. So if you're keen to get into this space, then doing some initial gig work could definitely be a great thing to look at.
Definitely. Yeah. And so it's risk, it's put there as risk low, because obviously if you make the gig, you're getting paid.
Mm-hmm.
But the difficulty is medium, because you do need to have some sort of talent. So
yeah, can I just add one thing? So I would agree that generally it should be reasonably low risk, but this week we actually saw an example where it was definitely not low risk. So there was a protocol called Hope Finance, and they launched a tomb fork on Arbitrum. And basically they had 1.9 million in their Genesis farms, and they rugged. And from what I understand, it was the case that there was a Docs team member who was doing the marketing. So he was on the James Pelton AMA, and his base, I think, was other places as well. And supposedly he had no idea that this was a planned rug. It was only the dev who was in the know on that front. He'd just been hired, to come along, do the marketing, be the face of the project. So, if you are thinking about doing anything on that side, then make sure that you're working with a really reputable, trusted team. You've seen everyone. You're comfortable that they are who they say they are. And I know that's an extreme example, but genuinely, I've been following it because I was just interested to see whether there were any good practices that they were applying for launching a tomb fork. But yeah, it makes me feel sick when I see something like that. And assuming that guy is telling the truth and he wasn't directly involved, then I feel very, very sorry for him. But you've got to be very careful coming to do any work in the Web3 space.
Yeah, the good thing about most of the gig economies like an X hashtag or Fiverr is that they'll hold the funds in escrow. So if you're looking to, let's say I'm going to develop a web page, they're going to pay the money in escrow, and then once I create the page, the funds are released. So there is, things can always go wrong. You can never say there's no risk, but that's why I say low rather than no. But yeah, it's a great point there, Rob. On you do have to be careful who you're working with.
Mm-hmm. So we did have a cool little story here. Captain Hindsight saying that I've used many trading bots, Crypto Hopper, 3 commas. I've also tried copy trading and eventually built my own bot in Linux that links to TradingView webhooks and had the most success with the latter. That is awesome. I think it continues a bit. I've also lost a lot of money learning in the process, but all for a good cause. I think that's an important detail for pretty much everything here. There will be times where you do lose in all sorts of ways in cryptocurrency, such as life as well. And those are learning experiences. I think there's a lot of times that I've lost a bit of money and I've learned from it. You develop techniques, or you develop skills to try to avoid that thing. Often, especially in trading, it's often you against yourself. You're accountable for that kind of thing. So when something happens, you can choose to look at it, see why that happened, and try to grow.
Just with trading though, be careful though, because obviously what happened in the past is not necessarily indicative of what's going to happen the next time you see a similar pattern. So
that's true.
Don't learn in that way. Learn
that's
kind of
true.
more from a theory and side.
Mm-hmm. Good point.
Cool.
Alright.
Alrighty. But no, I think that was a good kind of out the box tip in terms of exploring gigs in the crypto world. Cool. Should we talk number 3 then, which is buy and hodl or dollar cost average? So I think we're all
Lowest risk one.
advocates for this. Yeah.
What's that?
Who wants to kick off?
Well, I'm the least risky guy here, so I should probably take this one.
Yes, always, sir. You are always the most bullish though, so therefore your propensity to buy and hodl is probably probably the greatest of all of us.
No,
So-
I'm better at giving advice than taking my own advice, and that's why I think dollar cost averaging is it's great because I should probably do it, but I don't listen to my own advice.
Just for anybody that doesn't know, what is dollar cost averaging, and why do you think it's a effective strategy to get into crypto and a low risk strategy?
So first, just to rewind a step, we've all seen what crypto has done over the last 5-10 years. Bitcoin over like 10 or so years, and altcoins 5 or so, or depending on which coin it is. And generally holding these assets long term has been a great strategy. So really, then it's, as mentioned earlier, it's very difficult to time the markets. So basically, what dollar cost averaging means is you're just putting in a certain, a dollar amount in on a preset period. It doesn't even really need to be preset, I guess. It can be any time, but you're just buying at different, basically just, whether it's every 2 weeks, once a month, whatever you feel like, or just at random times even. You're just constantly, I guess you're supposed to buy the same amount every time. I guess you don't have to. It's probably not defined exactly what it is, but I think generally people would do it on a set schedule of a set amount, but I don't think that specifically has to be that way. But if you have $100,000 to invest, it basically means you don't just put that in on day one. You would probably do if you're conservative, you'd probably maybe do $2,500 a week or a month or something like that, I guess, with 100,000, something like that. And that way, you really don't care much about the short-term price because you have that long-term conviction. So you're actually kind of happy if the price goes down in the short term because, you're $2,500 that you're buying every month is going to buy you more crypto. So, so basically you don't really care much about what the price is doing short term, just, because you have that long-term conviction. I saw a stat about this. It said something like dollar cost averaging beat 80 some odd % of professional traders. Just dollar cost averaging into the, into crypto over the years. So even professionals can't beat just buying at regular intervals usually. So very strong strategy, very low skill required. Can't go wrong.
I find it's really good for just your mental state as a crypto holder, because as your dollar cost averaging, like you were saying, when the price goes down, you're like, oh, this is great. My future purchases are going to get more. But when the price goes up, my previous purchases are worth more. So basically anything that's happening as your dollar cost averaging into the market, you're not upset about it. You're as long as I'm getting my funds into Bitcoin or into whatever bond, whatever asset you're thinking to dollar cost average into, as long as you're doing that consistently with the same amount over a long period of time, it doesn't matter what the market does during that time.
Yep.
Less stressful.
Yeah, well said. No, I mean, I've not got an awful lot to add, to be honest.
It's a pretty basic concept.
I guess you can. What's that?
Not much to be said about it. It's a pretty basic concept.
Yeah, totally. I guess
powerful.
You can do dynamic DCAing where especially if you've got sort of levels that you think an asset is likely to reach. So, for example, when Bitcoin was trending down, and a lot of people had high conviction it was going to hit certain levels and then 17K, blah, blah, blah. If you have quite clear conviction on that, then you can set some sort of higher orders, limit orders, at those ranges. So you take advantage more heavily of lower prices. But yeah, I think as Aaron said, just having a defined amount every week, every month, whatever, can work.
And a lot of exchanges can do that for you.
Yeah,
it's something that we'll be looking to add to our app in the future. But a lot of the centralized exchanges do offer that now, and that's something that we'd love to offer in the future, and we will.
Perfect. 100%. Cool. All right. Shall we move on to next one then? So staking crypto. which is obviously one of our favorites, given it's our bread and butter and our missions to become the largest and safest crypto staking platform in the world. We definitely know a thing or two about staking crypto. So yeah, Aaron, do you want to kick off just with an overview of what it is?
Yeah, so I mean, there's a lot of different forms of staking crypto, but at the core, basically what you're doing is you're taking a token or a pair of tokens or some sort of token of some sort, and you're basically depositing that somewhere to earn a yield on it. I think this was most prominent in like proof of stake blockchains, where you would stake crypto on a validator to help secure the network, and in return you would get a percentage of the fees that were collected for the transactions. Staking has evolved quite a bit. There's a lot of different ways to stake. For example, a lot of decentralized exchanges have a token where you can just stake their token right at their exchange and then earn a percentage of their trading fees at that DEX. Bomb Swap, which is the DEX of Bomb Chain, we have that there. So for example, like if you deposited a Bomb Swap, now one Bomb Swap is worth 1.28 Bomb Swap. So you would have gained 28% if you were in Bomb Swap if you deposited your Bomb Swap at the beginning. Bomb Swap gains quite a bit of fees, so that ratio is going to keep going up. So that's your most basic form of staking, is like a single stake. So whether that's like to secure a blockchain, like with proof of stake, which actually I can demo with Bomb Chains. So how do I get to the anchor? Oh, I can get it from here. I have high-speed internet, I swear. It's that Microsoft deal. Their website's slow now. They're getting too much traffic. So, staking. So, for example, like these are the validators that are securing Bomb Chain. So anybody can come here and they can stake Bomb. Right now, we have our gas fee set very, very low, and the price of Bomb is fairly low. So the APRs aren't exactly spectacular right now. But yeah, this is essentially staking, right? You stake. Okay, that's not high enough for the minimum. I have no Bomb in my wallet right here, but yeah, you can just stake any amount that you want, and you'd be entitled to your percentage of the rewards, which come from the fees. Most basic form of staking, single staking. So just one asset, you stake it. You do need to be careful when you're staking with the validator, though, because there's often lockup periods. So you can't just stake it and then unstake it immediately. Actually, with any kind of staking, you need to watch out for these things. I guess actually let's go into that right now, I guess, before I talk about the other kinds of staking. So with staking, because generally what you're doing is, always what you're doing is you're depositing either an asset or, a group of assets, and you're getting a yield in return. So oftentimes there can be either a deposit fee, or there can be a withdrawal fee, or there can be, what was it that you just mentioned, Rob? Or there was something else that was mentioned. What else is there to watch out for?
You are muted, Rob, sir.
Sorry, I wasn't going to be much help anyway, to be honest. Yeah, deposit fees, withdrawal fees. I mean, yeah, you're probably going to go on to this.
I had something else. What was I going to say?
There's the lockup period.
Oh, lockup period. Yeah, that's it. Yeah. So so definitely watch out for lockup periods in case, if you're going to need access to your crypto immediately. Actually, a good example of lockup periods burning people was with the Terra Luna situation, right? Mm-hmm. So I'm not sure how long the lockup period was there. I wasn't involved in it, but was it 2 weeks or something, I think?
I had 2 weeks or 20 days in my head.
Yeah.
But I wasn't there either.
I think over that period, the crypto cratered from $90 to $1 or something like that, or, give or take $20 or so on each side, but I'm not sure exactly where it went from. But yeah, I mean, people just couldn't get their crypto. It was locked in there, right? So at that point, it doesn't really matter how high the yield is. If your $100 per token crypto goes down to under $1 or to a fraction of a penny, the yield that you earn doesn't really make a difference. So, I mean, I'm not saying never to stake in somewhere where there's a lock period, but just do your due diligence and, make sure that you know what you're getting into, and, that you have that long-term conviction that, you weren't, even if some FUD comes out around this token and, price drops, you're not panic selling anyways. So you don't really care. That's a situation where you wouldn't really care about a lockup period. So.
100%. I mean, you just need to be careful not to be overexposed, right? And I know it sounds really obvious, but it can happen really easily, especially if an asset's performing really well. You start to go, why haven't I got more in here? Oh,
Yeah,
maybe
why
I
am I
should
in this one
actually,
that's not performing? Right? Like, it's
yeah.
like, why don't I convert that one over to this one?
Totally, yeah. And I think I've mentioned this on previous AMAs, but I had a similar situation with UST. I sort of not long after the bear market began, um, you know, converted quite a lot of my crypto holdings to stables, and I had them well diversified. But then I was kind of, had a chunk in Anchor, getting 20%, seemingly risk-free. And I was like, well, maybe I'll convert some more, and then kept on going to the point that pretty much all of my stables were in UST, and we all know how that ended up. Some I managed to get out around 93 cents. Others, for various reasons, not having access to hardware wallet, etc. I still have and are worth absolute buttons. So yeah, you do need to be careful not to be overexposed, even where you are really bullish on something. And yeah.
I was going to ask, how did Anchor work? Like, was there no lockup periods?
This is just to clarify. This is different from Anchor that work with us. Yeah. ANKR. That is not the people that scam.
Yes. Anchor.
Yeah, as in just the ship's anchor. So the 20% on UST was basically just no lockup period. So yeah, but the crazy thing was that you could basically, when you deposited UST, you got AUST as a receipt token, and then you could do crazy things and basically
use it as collateral
strategies with that and borrowing against it.
Yep.
So proper degen things that you look back on and go, probably shouldn't have ever even considered that. But at the time were very profitable. So yeah, but anyway,
quick question for you, Rob.
It was instant access.
Considering what happened with UST, do you agree with the statement from Anchor Protocol that it's better savings?
I would say, based on my experience, no. But look, I'm always very pragmatic about these things. I was aware there was risk. No, I know you are. I know, and sorry, I'm answering in usual serious Rego Rob style, even though it was a joke. But yeah, you've got to be alive to the risks, right? And although I was overexposed and I was gutted about it, you just got to go, well, I have to take responsibility for making the decision to become overexposed, right? And you learn from it, as Simon said earlier.
It was so tough. Like, I wasn't even involved in it, and like, it's like when it was at 90 cents, it's like, well, do you buy it thinking that for sure it's got to go back to $1? Or, if you own some, do you say, hey, this is my chance to get out at somewhere near $1? It's like, it's like, I wanted to make a trade, but I just honestly didn't know, right? Like, it's like,
yeah. Well, I think I mentioned this to you before. I remember hovering my finger over the sell button at 97 cents. And it was the case that Joe Kwon then tweeted and said, deploy steady now, deploying more capital or whatever it was. And I was like, oh, it'll be fine. It wasn't, so should have taken that opportunity. So, but anyway,
as you can see, there's a lot of staking options, and there's so many risky options, and some that are just complex. Require DeFi protocol, require a lot. Like, you need your own Web3 wallet and all this. What did you just pull up here? And I think this might be the solution to easy staking for people.
Yeah. So this is one of my favorite domain names, by the way, but it's a bomb.app. It's the homepage of our Bomb app. And I was going to say mobile app, but that's recently changed. It's no longer just a mobile app. So this is just our Bomb Money app. It's already available on Android. It's coming soon to iOS. We're talking to Tim Cook right now about it. And we have a desktop version as well. What this app lets you do, it's geared towards anyone, but it's really geared towards a brand new crypto user. So ease of use, what a lot of the centralized guys have done, they've made it very easy to use their platforms. And that's how, that's how they've onboarded hundreds of millions of users or however many that they have, is because the ease of use and just this way that they explain everything. And, there's no roadblocks to getting started. So what we did is we said, okay, we're going to take that model of the ease of use, but we're going to power our app and everything that happens in terms of staking and all aspects of asset handling and currency really is all done on our own BOM chain, public blockchain. So everything's 100% transparent. I mentioned our communities earlier today, but we're going to be, well, right now I'm actually working on, dashboards and all kinds of reporting for, all of BOM chain in terms of our bridges and, what our net deposits are, how much we actually have in the bridge contract to make sure everything lines up. It's always one-to-one backed, and also for the staking, right? Like, so how much have we had staked? When is that coming due? In 6 months, we're going to have this many stakes due and for this amount of money. And so, and we're going to actually allow the community or the public to see a lot of these dashboards, not the same way that we see them, but we're going to make a lot of them public so that people can see that, hey, okay, well, there's, 8,000 Bitcoins on BOM chain and there's 8,000 Bitcoins between their 3 bridges on 3 different networks or whatever, right? So it's going to be something where you're going to be able to see that right in a dashboard and click a link to actually see it in the wallet, right? So this is not only a dashboard showing the stats, it's all going to be like, verifiable by yourself. So that's the BOM app difference right there. But again, key is while maintaining the ease of use. That's really the key.
Yeah, and sorry, by the way, I had to run away to grab my charger there. But yeah, no, I think that was a great explanation. And as you say, it's just so simple to get started, right? I mean, literally, you need zero crypto knowledge to get it started. So yeah, we've not even really began the big bang marketing push. So opportunity to get in early, and we've also got a super generous referral program, which won't be there forever, but is there to help us with initial traction. Where basically, if you refer a friend and they create a minimum of $100 stake position with you, and then we'll get a $50 equivalent stake position as a bonus for that. So yeah. And then, should we have a look at the desktop version of the app? Obviously, we're still making some improvements to that, but it's coming along very nicely.
Yeah, we can do a little preview of it.
Well, you open that up. We do have a quick question here. It's not in the careers page, but does BOM have any need for a data engineer analyst? Does BOM pay employees in crypto?
I'd say at this very moment, we don't need a full-time data analyst, but
it'll come.
Definitely something that would be useful, either as contract work potentially, or in the future potentially full-time. Why don't you reach out to any of you know the email offhand?
Yeah, so if you ping it over to jobs@bommoney.com, we'd love to have a copy of your resume, and we can bear you in mind for future opportunities. Be that permanent when the time is right, or if we've got a need for some shorter term gig work, like we talked about earlier.
So this is the web app. This is the least mature of the 3, just because we already had our mobile apps in a really good state, and then we decided we should also have a web app. So it looks quite a bit like some of the internal pages of our mobile app. And we'll continuously be improving this, but we've got it in a state where we're quite happy with it, and it's working really well. You can buy crypto, you can deposit crypto from other networks. Right now, we just have BTC. We're adding several other coins in the near future. It's as easy as depositing to a centralized exchange, really. You go to deposit BTC. I want to deposit from Binance Smart Chain. Basically, just send BTCB to this address, and we have automation in place to pick that up and credit you on BOM chain, and you'll have Bitcoin in your wallet on BOM chain and ready to stake. If you got wrapped BTC on Ethereum, same thing. You'll notice the deposit address is the same. Any EVM compatible chain, you're going to have that same deposit address. So for anyone that's used centralized exchanges extensively in the past, you'll know that that's the case there as well. And it's really a great user experience, because you could just save one address in your MetaMask, for example, and just that's where any asset that is supported, you could just send it there anytime and from any address, really, and you're going to get credited. So It's really is the easiest way to get crypto onto a blockchain or a staking platform or really any place.
Nice and fast.
I will say that there are some like centralized components that are part of that bridge. We had to do it that way just for the ease of use. So, but like everything's done through smart contracts, but we do have something that's, centralized in our data center, basically, that is basically handling the verification just so that we can ensure it's 100% secure without having to reinvent the wheel there and make it decentralized.
And if you click on earn there, what are the yields that we can get here?
Oops. Oh, great stake. So 1 year, you're getting almost 30%.
Nice.
9 months, 21.7. 6 months, 14.9. And for a 3-month stake, you're getting 9.2. So very high compared to the rest of the industry. And these APRs won't be here forever. This is our launch promotion. Just really entice people to want to give this a shot, and just because we know how much everyone's going to enjoy it. So
yeah.
100%, yeah, and we're all excited about expanding the assets. So as you say, Aaron, it won't be long before some other major blue chips will be there as well.
We're actually kind of lucky that we didn't expand earlier, because our very next one was going to be BUSD. And now with everything that's going on with BUSD, we're not going to use BUSD for our stable coin.
Yeah, it would have been complicated.
It's a bit extra work, but it's just better that we didn't have to do that twice.
But yeah, we do have plans to add. These aren't definitive, but we want to add Ethereum, Polygon, Avalanche, and then a stable, probably USDC or USDT. But we'll finalize that and let everybody know. But there's definitely going to be a lot more staking options, and you can expect similar high yields and higher than you'll find anywhere else. So yeah, this is Bomb.app is a really great option. And again, this is the web version, so you do need to have a Web3 wallet. But if you don't want to worry about that, you just go to Bomb.app, download the mobile app, and like Rob was saying, it's such a simple process. Within 2-3 seconds, you've got a full Web3 wallet on your phone, and then you can deposit crypto, you can buy crypto, and you can start staking. And it's just such an easy way to really get involved with crypto.
We should probably try to speed through the next couple. We're already coming up on an hour.
Well, yeah, we did talk about the referral program. So
mining cryptocurrency. It has a hard difficulty. Risk is medium. Any of you have experience with mining? I have a bit, but I think Marco, you used to have a pretty big rig.
Oh, for sure, he's got the experience.
Yeah,
and I've just run like what's it called, hash something.
Yeah,
nice hash.
Nice hash.
Yeah, I've ran nice hash on some video cards, and as soon as we get to 105 degrees, I'm like, no thanks.
Yeah, it's interesting. There's a lot of the reason the difficulty is hard is because there's a lot of things that you need to learn. You need a lot of equipment, and you need the knowledge to set it all up. I mean, anybody can just mine crypto just from their computer, but if you actually want to make profit off of it, you need to get basically a mining rig set up where you'll have motherboard with a bunch of video cards connected to it, and they're all literally just running all day just to mine crypto. Now, initially when I set it up, I started in, I think it was 2016. I started mining Ethereum with my brother. We set up a bunch of rigs, and it was quite a learning experience because you have no idea how hot these things get. So we had about 30 graphics cards running 24 hours a day, and we'd put it would get over 40 degrees Celsius in there in that room, which was great in the winter because it heated the entire basement of the house. But in the summer, we had to come up with a ventilation system. So I mean, there's a lot of things you have to consider, which makes it hard. But it can be a very profitable because obviously it's a one-time fee for your equipment, and you're going to pay the electricity costs to run it all. But generally, if you're going to run it for 2 to 3 years, you'll recover your costs for the equipment, and then you're literally by like printing money. Obviously the big thing was that Ethereum recently went from proof of work to proof of stake, so you can no longer mine Ethereum. But there are other alternatives. Yeah, you can mine Ethereum Classic now, so you can switch your mining rigs over to Ethereum Classic. And what's really cool, and I wasn't too keen on continuing to mine Ethereum Classic, so we sold off about half of our rigs, and they've been mining for 3 years, and people still bought video cards because these things are really valuable and they still worked. So that's a cool thing. You can still sell your equipment after. But that's for Ethereum. You can also mine Bitcoin, but for that you need an ASIC, like
Specialized rig.
yeah, application specific integrated circuit, and those are like specifically designed mining machines just for Bitcoin. So the one thing is they'll only mine Bitcoin, whereas with my video card minings, I was able to say, okay, actually now start mining Ethereum Classic, or just pull it and sell it. Somebody can use it for gaming. But these things are just meant to mine Bitcoin. And yeah, you can buy them and set them up, but it's going to be the same thing. They're going to heat the hell out of whatever room you put them in, and they're loud as hell, and they take a lot of energy, which actually is the reason why Ethereum switched to proof of stake, because it was consuming so much energy just to maintain that blockchain. But yeah, so there still is opportunities with mining, but you do want to do some research and make sure all the costs you're putting in, you'll be able to recover from how much you actually earn while mining.
I know one site I used to like was I think it's whattomine.com.
Yep.
It lists, you can check with your specific graphic card what cryptocurrency would be profitable. Shows you about how much you'd be making every day. That way you can easily, verify if it's profitable for you for what you have.
Yeah, definitely. The one thing I'd warn about this is I don't know if it's still prevalent now, but back in like 2017, 2018, you just had so many shit coins showing up here, and people would be like, oh, mine this because it's paying so much. But then everybody's just mining it, and then they just plummet the price, right? Because everyone mines it and sells it. So it's not long term. And then you have to go reconfigure all your rigs. So it's easier if you're just going to be mining for years. It is easier just to find something that is like a long-term crypto and mine it. But this is a really good resource though, even for that, because even if you're just mining Ethereum Classic, for instance, you can go here and see how much you're going to earn for that. So yeah, great shout out, Simon.
Very nice.
Cool. All right, should we go on to the next one then? So we've got play to earn with difficulty medium and risk low. Again, this isn't an area that I'm familiar with it conceptually, of course, but don't have any real experience of. But Marcus, I think again, you're the man on all things play to earn.
It's just my degen of needing to have my hands in and a little bit of everything. But yeah, play to earn was an interesting thing. It started really popping up a couple of years ago, and basically, if you've played video games, you've been used for the last 20 years. You're used to buying a video game and paying to play it, basically. And especially in the last 10 years, there's microtransaction. They microtransaction the hell out of you, right? So you'll buy a game and then they still, give us $3 or $4 more and you get this bonus. And they just keep doing that until you didn't realize you spent like $600. Well, the inverse of that happens with play to earn. So the companies actually generally will give you the games for free and actually pay you in crypto to play the games, complete tasks in the games. In fact, there's as we were talking about the gig economy earlier, you can do a gig economy within a metaverse, something like Decentraland. They have like jobs that you can do in there that you'll actually earn crypto, which is pretty it gets pretty crazy. So you're basically living in a metaverse world and earning income there. And then there's whole things of owning land in the metaverse, and then there's start coming where you can rent the land out. You can get mortgages on your metaverse land. Like it gets pretty crazy inside the metaverse. But
can I have 100x a house?
Oh, for sure. You do whatever the hell you want in there. But one of the cool play to earns that I got really into was a game called Gods Unchained. I'll just spend like a minute on this, but it's a trading card game similar to like a Hearthstone or Magic the Gathering. And what's really cool is that it's free to play and you get packs of cards for free by playing the game continuously. But every card is actually an NFT that you can trade on Immutable X. So it's a cool concept because I don't know how many Magic the Gathering fans there are here, but I had actual physical cards in Magic the Gathering, which obviously hold value. But then they started going online as well, and so you'd have Magic the Gathering cards, and you'd be buying packs all the time, spending thousands of dollars on these packs, but you don't actually own them. You can't do anything with them. It's crazy, right? You just have them online, and that's it. So what's cool about, and there's so many different card games like that. But I like really like Gods Unchained. But what's cool is when you get a card, you own that NFT now, and then you can sell it. And there's some that are worth like 1 or 2 Ethereum. Some of these cards, so you can get some pretty cool collections there. But yeah, it's just fun because you're playing a game and you're earning packs of cards, and then if you get lucky, you get like a rare one, and you could sell it on the marketplace right away. So cool way to earn crypto right there.
Yeah, like I used to be like a really big Diablo player. Like I was like a top ranked North America, when I chose to play. But but yeah, like a lot of items you'd get would be like, unbelievably rare, but they might not be useful to you. If you play a lot, you might already have one better than that, right? But like if it was all based on crypto and NFTs or probably ERC 1155s where you have like the one token that can have all kinds of different items. So like you can have like swords and all these different things. It's like it's perfect, right? You can now send that to somebody, you could sell it, you could you can do anything with it outside of the constraints of what the game is built in, or the game could build in constraints to the token, or there's really an unlimited ways it could be done. Because of programming. But yeah, it's basically gives you a ton more flexibility than the traditional game of I got to grind myself for what I want, and if I don't get it, then too bad. And if I get 10 of these items that are all rare and I can only use one, too bad. It kind of like solves all that, and you can make money at the same time.
Yeah, exactly. Well, the big difference is that instead of me paying to play a game and just wasting hours and all this stuff, now I'm actually basically being paid to play a game. So it's a very interesting trend, and I really think it's going to start taking off even more.
Shall we move on?
Yeah, let's do it. Yeah, lending. So, I guess I can cover this quickly. There's not really too much to be said here. I was going to say I don't have much experience with lending, but I guess I've done lending in every form that you can because it's only kind of one form. So there's a lot of protocols where you can essentially, like Compound is like my favorite to use, but what you do is you pretty much deposit some sort of asset, whether that's a stable coin or a crypto, and then you can either just do just that, just basically deposit your crypto and then earn a very small yield on it. Typically, usually the yields are quite small there, but these protocols almost always, or everyone that I know of, they let you now use that as collateral to borrow against it. So a common strategy that I would do, or that probably a lot of people do, is they would deposit their Ethereum or Bitcoin or whatever they want to hold long term, and then they would just borrow like USDC against it, because it's with inflation. I'm very happy to borrow USDC, and I want to hold on to my crypto. So it basically lets you get liquid assets when you need without having to sell your crypto, and it can be really beneficial. Again, same with margin trading or futures. You got to be a little bit careful because whenever you're borrowing against your collateral, you have to worry about like what your collateral value is. But you can always leave like a safe margin. The sites make it pretty easy to see like how safe your position is, and what kind of movement is needed to get liquidated, stuff like that. So do a little bit of research first if you've never done it before. But generally, these sites will give you warnings if you're doing something dangerous, or they just won't let you do it. So you don't have to be too careful. Not financial advice, but the sites generally have safeguards in place. It's not doing anything too stupid. Yeah. I was on a Twitter space the other day, and I can't remember who was speaking, which is terrible. I was hosted by King Wabi, who's reasonably well known in the space, and they were sort of hypothesizing that in the next bull run we may see a sort of uptick in protocols that actually offer under collateralized lending, because obviously it's expected that at the moment that it's over collateralized. But the idea is that actually, through building a profile of your behavior, your wallet's behavior, that you can determine someone's standing you know, and
Credit
their
worthiness?
ability to repay. And therefore, theoretically, in the future, you could actually have loans that are under collateralized, which is an interesting concept. You know, obviously, it's borrowing similar concepts to credit scoring in the traditional finance world, which is an imperfect system, but you know, broadly works. I don't know. I've got my reservations as to how reliable that would be, and I think it could be pretty heavily manipulated.
Yeah.
So it's an interesting concept. I just thought I'd throw it out there. So, yeah,
I've
that's
heard
that.
of some like lending protocols that have done like under collateralized loans, but they were typically to like institutional clients, right? Like you'd have to, it's not something where you just connect your MetaMask and do it. Like you have to get
Yeah.
approved for it essentially, kind of like a loan. But yeah, I mean, in terms of doing that decentralized where you don't have to go through that process, I don't know how they would possibly do that. I mean, with everything open source, like you can just see the code to see, okay, so if I do this, this, and this, then that's how I get my money out. And you know, they're giving me, I don't know. I'm sure they've already thought of this. That's obviously your biggest pain point in building something like that. But
yeah. I think you make a good point that to do it decentralized would be very difficult. The only way I see it working well is if you have one regulatory body that would keep track of these scores, but then that becomes centralized, which is something I personally try to avoid.
Yeah, no, absolutely. As I say, I'm not convinced we'll see that take off because it feels like
you could just learn their algorithm and you could just game it, right? Like you just say, okay, I'm going to set up 100 wallets and I'm going to make everyone look like it's going to have the best credit in the world, and
yeah,
you know, in 6 months it'll be good to go.
Yeah, because there's no repercussions since you wouldn't know who the wallet owner is, so you couldn't go after them once that wallet's depleted. So, but I mean,
I think
it's awesome though. To me, I love what Rob's saying because it shows people are innovating and thinking about more ways to use crypto, more ways to have DeFi, and as we get mass adoption, this is something that people are going to have to solve for. So it's awesome that it's already being talked about.
Yeah, it's amazing. You know, I was bringing up with you guys earlier today, you know, another way to kind of implement like options, like the same way that options would be traded on stocks, how that could be implemented in crypto, decentralized. And I haven't really nailed it all out, but and obviously that's not a priority whatsoever. Just some idea I had, but yeah, it's, you know, it's a lot. There's a lot of people out there that are just always thinking of what kind of cool things can we bring to DeFi that either exists in the traditional finance world or doesn't even exist there, that, you know, they're just going to create it within decentralized finance. And yeah, very interesting space.
Definitely. All right. Should we talk arbitrage trading? And Aaron, I think you're probably the best man for this.
Yeah. So where do I start? Arbitrage, you're basically, what you're doing is you're trying to make a profit yourself, that taking advantage of a price discrepancy between two different markets. Those two different markets could really be anything. So I'll give you some examples. It could be two decentralized exchanges on the same blockchain. It could be a centralized exchange versus a decentralized exchange. It could be a decentralized exchange on one chain and then another decentralized exchange on a different chain. So there really just, it's any two places where you can buy and sell a certain asset. If there's a price discrepancy, there's money to be made, because obviously you buy it at the cheaper one and you sell it at the higher one and you make the difference. So this has happened actually a lot with Bomb Chain, because a lot of our assets are on BNB chain, and, you know, everybody can see what the price is of that asset on BNB chain. And then we have, you know, a lot of those tokens actually have bigger liquidity on Bomb Chain. But that the prices are tracked separately, right? Because the prices are auto-calculated based on the pairs that they're in. So, you know, for example, if the prices are all even across both chains, and then all of a sudden somebody does a big trade, I mean, ideally they'd want to do it like, you know, proportionately on both chains at this, you know, concurrently. That'd be like the ideal situation for a trader. Like if you have two different, places where you could buy Bomb, let's say, and they both have even liquidity, and you want to buy like $500,000 of Bomb, let's say, the best way to do that would be to buy half and half, right? Just so that there is no arbitrage opportunity. Like that's, not, I guess I'm getting too complicated and not really talking about arbitrage now, but yeah, essentially with arbitrage, you just want to find a price discrepancy and take advantage of it. As I was starting to say, on Bomb Chain, it happens all the time. There's like a big buy or a big sell or something like that, and there's a big price discrepancy, and somebody will jump in right away and kind of just equalize the prices.
And they do have bots that look for these opportunities all the time and automatically do a trade once there is a discrepancy. So
that's right. I forgot to mention that. Yeah. So the first example I gave there of arbitrage opportunities where it's like two decentralized exchanges on the same chain, that's a really easy one for bots to take advantage of. And that's probably one, if you don't have a bot and a good bot, you're probably never going to get those opportunities because the bots are going to beat you to it. Because they'll do it literally like the next block or sometimes in the same block that you do, that the transaction that threw the price out of whack, like 3 seconds later, they'll be doing that transaction to normalize it. So yeah, a human will never beat that. But when you're involving multiple chains, then, you know, until bots are developed to take advantage of that, and there's more risks involved with that, right? Because bots want to do a no risk trade generally, or a very low risk trade. So whenever there's delays involved, so if you're dealing with like a centralized exchange and a decentralized exchange, you know, you can get an instant confirmation on the centralized exchange, you know, if you do a market order, but you can't get that instant confirmation on a decentralized exchange. So, you know, you have to wait for that to confirm. And if it doesn't confirm because the price changed too much, now all of a sudden your profitable trade might not be a profitable trade anymore. So whenever you don't have instant confirmations on both sides of the arbitrage trade, which I'll talk about that in a second, how you can get that. But so whenever you're dealing with like two separate blockchains or like a centralized exchange and a decentralized exchange, you got to be a little bit more careful just because of the fact that the trades are not going to execute at the exact same time. When you're dealing with two decentralized exchanges on the same blockchain, then what you can do is what all the bots do is they have a smart contract that actually does everything all in one transaction. So they will buy from the one exchange, they'll sell on the other exchange, they'll do whatever swaps that are needed in between to get the maximum value out of it. And typically what happens is they just, whatever the native token is on that chain, they'll just end up with a little bit extra of that in their account by the time the trade's done. So, you know, their wallet looks exactly the same after this transaction is done, just a little bit more BNB, let's say, if it's on BNB chain. So it's to you know, a really good arbitrage bot that's, you know, configured really well. It's just a money printer. Very difficult to make them just because it's so lucrative that, you know, a lot of really intelligent people have built them and configured them and really tweaked them. So I wouldn't, you know, I'm not trying to scare anybody away from looking into it, but
well, that's why the difficulty is rated high there.
Yeah. You know, if you don't go with that first example of like two decentralized exchanges on the same chain, because that's where you're going to be competing against. You hear the cat?
Yep. Kitty.
Yeah.
So I mean, you're not going to beat bots if you're doing arbitrage on the same chain between decentralized exchanges. So you pretty much, if you want to do it manually, you pretty much got to do cross chain, or, you know, I guess you could do centralized exchange to decentralized exchange. But again, I think there's bots probably that are all over that stuff too, if it's any of the major exchanges. So yeah. I mean, there's really a lot of opportunities on Bomb Chain all the time, just because, you know, well, we already have bots on Bomb Chain. So on Bomb Chain, when we have two pairs that are out of whack, a bot will fix that within the next block every time. So that's pretty cool that we have that going already. But yeah, when the price is different between BNB chain and Bomb Chain, that's when there's a good opportunity for you to step in.
Yeah, and a great summary for anybody looking to learn more about arbitrage. Rob wrote a really good blog there. It's linked off on how to make money with arbitrage. So if you want more detail and you want to learn more about arbitrage, have a look through this blog.
I'll post it.
Awesome. All righty. So yeah, I think we're on to the final then. So crypto gambling and resident DGen Marcus, over to you for this.
Yeah, I mean, it's very easy to explain. There's obviously online gaming sites all over the world, but there are some that are strictly deal in crypto. So there's no cash exchanged, and so you can deposit Bitcoin or Ethereum, and you're literally gambling in Ethereum, so or Bitcoin. So you're like, I'll put 0.01 Bitcoin for the Bills to win, which wouldn't happen, unfortunately. But the cool thing there is that no, it's all done anonymously. So you're doing it through your Web3 wallet. But also the really risky thing there is that it's all done anonymously by the sites as well. So there's a lot of gaming sites that will take your money, and then if you win, they'll never pay you out, right? So you really do have to read some reviews, find out sites that have been there for a long time. I listed BitStars there. They've been around for over a decade now. And it's really easy to use some of them, the biggest thing is going to be, will they actually pay out if you win? And if you look at reviews, that one definitely does. But yeah, it's crazy to think that back in, I think it was like 2014 or 2015, it was the first time I deposited Bitcoin just because it was an only way to get onto this gaming site. And then I looked back at my betting history. I was like, holy shit, I was betting like 2 to 3 Bitcoin on a bet because it was like $200 a coin at that time. Yeah. I'm like one bet paid out like 10 Bitcoin. I'm like, oh, I probably should have kept that, but I'm too degen to do that. But yeah, I mean, that's a really easy one to explain. It's just online gaming, obviously extremely, extremely dangerous because, first of all, gambling in itself should only be done as entertainment and not an investment. But yeah, there are crypto specific gaming sites as well to check out. So have fun, but be careful.
Yes.
Money's better spent.
Totally. No, cool. I think that was a good rundown, and yeah, really, really recommend the blog. So bondmoney.com/blog, and you'll find it as the most recent post there. But yeah, you know, the key thing is that for the majority of people, finding an asset that you have high conviction in for the long term, holding it, DCAing it, and you know, if you're willing to take on a little bit more risk, staking it, you know, is probably the easiest way to do well. And obviously, in terms of staking, that's where Bomb app comes in. So if you want to take advantage of that, you can do so at bomb.app, and yeah, get up to 29.8% on your Bitcoin. And as we mentioned earlier, there's a really generous introductory referral program as well. So make sure to check that out. Just, I guess, before we wrap up, if anyone's got any questions about anything we've covered, or any comments, or, you know, just generally about anything we've got going on at Bond Money, feel free to drop those in. We've got our Twitter space on Friday, so that's 6 p.m. UTC, 1 EST. Would love to see you guys there. You know, we'll just be having a good informal conversation around similar topics, so definitely come along to that. But yeah, just in case anyone's typing in any last comments or questions, have you guys got anything final that you wanted to cover?
No, I
really enjoyed doing this. These series are fun. And
great chat with everybody.
If we're gonna jump to the degen stuff for just a second, if anyone's done any of their claims and they have any feedback on it, I'd love to hear it. Anyone that like picked option 2 and saw the nice chart of all your different assets and stuff, or you can feel free to pop by our Twitter space and we could talk about that at the end of that. But yeah, I'd love to hear feedback on that if anybody's done it and has any comments. Actually, you know, maybe not right now because we're kind of over the time now, and this is not a DeFi focused AMA, but we should probably go over the stats at some point on the claim page, or for the option 2, just to kind of explain to people why they do what they do. But we can save that for Degen Thursday.
That's right, March 2nd, first Degen Thursday.
Yeah.
Sounds good. Cool. All righty. But yeah, thank you guys for coming along. Thanks to everyone who's listened back. Do make sure to hit the like button. We always really, really appreciate that. And hopefully you're all already subscribed. But if not, do make sure to hit subscribe.
And the bell.
But yeah, and put the bell on. Yeah, always forget that one.
Oh, wait, actually,
always
you know what?
want to know when we're live.
I tried to put the bell on earlier today and it said that I couldn't do it because something about our channel has content that's intended for kids. I have to change a setting on our channel. I think the bell's not enabled.
Yeah.
So
we don't want kids betting on crypto gaming sites, so we'll change that. But yeah,
bombs for kids.
All right, guys. Yeah, it was a pleasure having everybody here and learning how to make some great money in 2023 and top ways of earning crypto in 2023. And yeah, as Rob said, we'll see you guys Friday at the Twitter space.
See you guys.
Have a great day, Bombers.